Hey guys, this is Julie. Interesting that we've got the SPX cash market opening at 8:30 and we're sitting at 45.1391 currently. The JP Morgan caller, the call caller for their expiration December 30th is 45.15. So we have past experiences several times where the price exceeded the caller and then came back later to trade underneath the level, and they were able to close it and then get out of the trade. So I think that they could very well allow this to run higher for a little bit with the intention of bringing it back below 45.15 before the expiration. So keep that in the back of your mind. JP Morgan is the dealer and they usually don't lose. So don't fight the dealer, right? But as far as today, for this, immediate time period, don't worry about the call caller because there's plenty of time for them to get it back underneath. They're not losing money for a call caller when it goes above it. They're just not participating. And trust me, they'll probably be hedging on top of it, running a call with it. So if there is a big bounce higher, I would be tending to think that they're hedging and running calls with the move, is the way I'll be looking at it. But you're going to have some resistance right away. So first we have support at this 8-day one at 45.04. And then we run into an 8-day three close. So if the 8-day one is on the open and the 8-day three is on the close of that prior 8 days. So the current 8-day open three is way up here, but the prior close was at 45.37. So we might, and then we have a 7-day one here at this 45.37. So we might have a very truncated move at this September high and come back down, is what I'm trying to say. We might get those September um, risk stops, but I'm not sure if we go for the prior August. That would be a little bit higher at 4,600. So if it does, if they say, well, we're already up here, let's just get it done and then come back down, that would make sense too. So just don't worry about the call caller at this moment, but do keep it in the back of your mind that I think that it will come back before the end of the year. So let's take a look at the ES, or let's just take a look at the NQ. We've looked at the SPX. The NQ has some weekly levels that I think that you want to be aware of. 15 790 was holding the immediate support. So that 15,800, 15,790 was the weekly support. But if you come over here and look at this monthly, you're going to see that at the 790, 800 drops to this 700 level. And the upper level of resistance is that 15,991, 16,000 level. There is also a 7-day three. There's a monthly one and a 7-day three right here at this 16,000, 15,938, actually 15,938, and then your 15,991. So there's plenty of upside support that has me a little bit concerned for the NQ. And so there's 1, 2, 3, 4, 5 days. This is a 7-day three. So there's 2 more days, and there's 2 more days. There's today, tomorrow, and Wednesday left in this week. So I'm not sure that 938 is going to break. Just keep that in the back of your mind. We do have a low vol environment, and the Globex overnight started out weak. Hang on one second. Let me put this on the Globex range. Market opened Sunday and sold off to the Globex 1, sort of consolidated, broke it, started to make a run for the lower one, but got right in the middle of that Globex distribution and bounced. Now, granted, we've got that weekly support at those levels, but it's just, amazing to me that the markets are so measured in the measured move, that these dealers know where these middles are, and if they're not hitting the ones, they're hitting the means. So we rallied all the way up to these upper levels, and they're holding the Friday high, and that's a pattern that sort of was repeating from the prior periods. That initial high holds, and so but London really did come in with bidding up those ones, and let me show you what that looked like right here. And these are the daily ones. So London came in right on the daily ones and started hitting that. So that was right in the middle of your Globex range, and you had a daily one. So again, you've got your daily ones on top holding resistance. So our VIX, let's take a look at that. These distributions change daily, and your 23.1 is now containing price. We're back in the middle of the 23.1, and that's really what is ideal situation for these algos. And so 1302 should be your support for the VIX. And if we look at the daily range, you can see that we're below the Sunday open and holding on our ones. The lower 1302, way down. We have a long way to go. So I would say that 1302 would be good for through this week, for this low vol to continue. I just do not see an elevated high vol situation. So low flat inside the one vols until further notice. We could just basically flatline going into the holiday. And that's all. I mean, we don't know what's going to happen, but considering everything that I'm seeing, especially with the S&P 500 sitting right there at 4514, and all of its support resistance areas, I'm not looking for a huge move at all outside these ones. NDX, same thing. NDX cash market, you've got 15,893 to the upside and 15,782 to the downside. Okay, that'll do it for today. Y'all be good, and we'll see you soon.